Is there more stress to come on the Korean won, and is the finance ministry doing enough to stabilise it?
In terms of the price action we've seen, obviously, from the night of the martial law, clearly they are. It's at 1410. In terms of the currency, I think there are two things that's happening, right? One is, external factors like the repricing of the U.S. rates, as well as in terms of what kind of other policies, exchange policy we can get out of China. And obviously the domestic politics. In terms of, I think, institutional backstop that obviously the finance ministry is providing is definitely doing its job. In terms of I think what we look at is the fundamentals. Korea is a net credit to the world. It does have a significant net assets. In terms of the gross assets, obviously is more than 2.5 trillion, but in terms of net asset, it's almost $1 trillion, and also has obviously significant foreign reserve of $420 billion. So in terms of the backstop, obviously is there, but in terms, I think going forward, what could actually really drive the currency a lot weaker is what we can get out of in terms of the tariff policies out of the United States and the response from China, which if actually they for competitive devaluation, that could actually see the Korean won a lot weaker. And that could be more of a determining factor in terms of the direction of the Korean won in the long run.
And indeed, if you take a look at the year-to-date chart for the dollar against the Korean won, it's gone from around 1,300 to above 1,400 right now. If we see a significant depreciation further than Juliana of the Korean won, what happens on the inflation front, and what would be the implications for the BOK?
Yeah, so if you look at it in terms of the past and historical relationship, like 10% depreciation of the currency on the trade-weighted basis, you can actually get 0.2% increase in inflation. But inflation is only at mid 1% at the moment. And, in terms of I think going forward, even with the base effects, I'm expecting inflation to be well below the target of Bank of Korea. And it can actually provide room for Bank of Korea to actually see its rates a lot lower than where it is, which still remains restrictive for the economy, especially given the weakness in terms of domestic demand.